What if I told you that you're already a Bitcoin investor? That's right. Without even buying a single Satoshi, you could be benefiting from Bitcoin's growth. Sounds crazy, doesn't it? But with companies like MicroStrategy embedding Bitcoin into their core strategies and joining major indexes like the Nasdaq 100, millions of people are now indirectly exposed to Bitcoin. From 401k plans to ETFs like QQQ, Bitcoin is quietly becoming part of mainstream investment portfolios. This isn't happening by accident. It's part of a broader movement where traditional finance and crypto are colliding in ways most people don't even realize. Whether you're a seasoned investor or just dipping your toes into the market, understanding how Bitcoin is weaving itself into the fabric of global finance is essential. And welcome to the Chainpoint channel. In this video, we're breaking down how companies like MicroStrategy are transforming Bitcoin from a niche asset into a key player in traditional markets. We'll explore how this impacts your investments, why it matters for the future of finance, and what you can do to stay ahead. Let's dive in. But before we continue our talk, don't forget to hit the subscribe button to stay tuned to what is happening in the crypto world. And remember, everything we say here is not an investment advice. Always invest wisely. Let's get started. MicroStrategy's addition to the Nasdaq 100 is a milestone that extends far beyond the company itself. Known for its aggressive Bitcoin strategy, MicroStrategy, MSTR, is now part of one of the world's most prestigious stock indexes. This move means millions of Americans with retirement accounts like 401ks or investments in ETFs like QQQ are now indirectly exposed to Bitcoin, whether they realize it or not. It's a subtle yet powerful way Bitcoin is infiltrating mainstream finance. This inclusion has a ripple effect. For starters, it brings Bitcoin one step closer to mass adoption by embedding its influence into traditional investment vehicles. Think about it. Even the most conservative investors who prefer index funds now have a stake in Bitcoin's performance through MSTR. For anyone wondering if Bitcoin has a place in traditional finance, MicroStrategy's move is the answer. What's fascinating is how this aligns with MicroStrategy's long-term vision. Michael Saylor, the company's outspoken CEO, has been unwavering in his belief in Bitcoin as the ultimate store of value. Starting with a $250 million Bitcoin purchase in 2020, MicroStrategy has since transformed its corporate strategy to revolve around the cryptocurrency. This Nasdaq 100 inclusion is validation not just of the company's performance, but also of Bitcoin's growing legitimacy. But this is just the beginning. The impact of MSTR's inclusion goes beyond Bitcoin exposure. It also sets a precedent for other Bitcoin-centric companies to potentially join major indexes. As this trend continues, it begs the question, how will the dynamics of index investing evolve as Bitcoin becomes a core part of traditional finance? An index is like a snapshot of a specific segment of the market, designed to track the performance of a group of assets. Take the Nasdaq 100, for example. It represents the top 100 non-financial companies listed on the Nasdaq exchange, including tech giants like Apple, Microsoft, and now MicroStrategy. These indexes serve as benchmarks for investors, offering insights into how particular sectors or the market as a whole are performing. But how do regular investors access these indexes? Enter ETFs, exchange-traded funds. ETFs, like the popular QQQ, replicate the performance of indexes like the Nasdaq 100, allowing investors to buy shares in a diversified portfolio with a single trade. This makes it incredibly convenient for anyone to gain exposure to a wide range of companies without needing to buy individual stocks. For instance, by investing in QQQ, you're not just buying shares in tech giants, you're also gaining indirect exposure to Bitcoin through MicroStrategy's inclusion. The beauty of indexes and ETFs lies in their simplicity and accessibility. They're a go-to choice for both retail and institutional investors who want diversification without the hassle of actively managing a portfolio. For someone just starting out in the crypto market or traditional finance, investing in ETFs like QQQ offers a low-risk way to dip their toes in. And with MicroStrategy in the mix, it's a subtle introduction to the world of Bitcoin, whether investors realize it or not. Indexes aren't static, they evolve with the market. Companies are added and removed based on performance, size, and other criteria. This dynamic nature ensures that indexes remain relevant and reflective of the current market landscape. With Bitcoin-centric companies like MicroStrategy making their way into major indexes, it's clear that the line between traditional finance and the crypto market is becoming increasingly blurred. MicroStrategy's inclusion in the Nasdaq 100 isn't just a win for the company. It's a backdoor for Bitcoin into mainstream portfolios. Here's why. MicroStrategy's stock price closely mirrors Bitcoin's performance. With its treasury holding over 444,262 Bitcoin when we recorded this video, any movement in Bitcoin's value directly impacts the company's stock. This makes MSTR a de facto proxy for Bitcoin in traditional financial markets. Now let's talk ETFs like QQQ. These funds replicate the Nasdaq 100, which now includes MicroStrategy. By investing in QQQ, millions of Americans indirectly gain exposure to Bitcoin without even realizing it. This is a game changer. For conservative investors who've avoided crypto due to its perceived volatility, owning a piece of MicroStrategy through an ETF is an easy, low-risk way to benefit from Bitcoin's performance. This Bitcoin proxy effect also amplifies MicroStrategy's influence. As Bitcoin rises, so does MSTR's stock, creating a feedback loop that attracts more investors. Think of it as a two-for-one deal. You're buying into a high-performing tech company while indirectly participating in the crypto market. It's a clever strategy, especially for those skeptical about diving headfirst into Bitcoin itself. But there's more to this story. MicroStrategy's approach sets a precedent for other companies to follow. Imagine multiple Bitcoin-heavy firms being included in major indexes, each acting as a proxy for Bitcoin's performance. This shift could redefine how traditional investors engage with the crypto market, bringing Bitcoin closer to becoming a staple of diversified portfolios. The question now is, how much further can this proxy effect drive Bitcoin's integration into traditional finance? When a stock gets added to a major index like the Nasdaq 100, it's more than just a badge of honor. It's an invitation to increase demand. This phenomenon, known as the index effect, occurs because funds replicating the index are required to buy shares of the newly included stock. For MicroStrategy, this means a surge in demand as ETFs like QQQ rebalance their portfolios to include MSTR. Historical examples highlight just how impactful the index effect can be. Take Tesla's addition to the S&P 500 in 2020. Its stock price jumped over 70% in anticipation of the inclusion. Similarly, Nvidia experienced a significant boost after joining major indexes. These cases show that the index effect isn't just theoretical, it has real, tangible consequences for stock performance. For MicroStrategy, this effect could amplify its already strong ties to Bitcoin. As index funds buy up MSTR shares, they indirectly increase exposure to Bitcoin through MicroStrategy's extensive holdings. This creates a ripple effect where Bitcoin's price movement not only impacts MicroStrategy's stock, but also the performance of ETFs like QQQ. It's a cycle that strengthens the connection between traditional finance and the crypto market. The index effect also signals a broader trend. As Bitcoin gains legitimacy through companies like MicroStrategy, more Bitcoin-centric firms could find their way into major indexes. This would further integrate Bitcoin into traditional financial systems, making it accessible to even the most cautious investors. The question now is how long it will take for this trend to reshape the investment landscape, and what it means for Bitcoin's future value. Now revisiting MicroStrategy's historical hitch in Bitcoin holdings, that in 2020, the CEO, Michael Saylor, made waves by announcing the company's initial $250 million investment in Bitcoin. This wasn't just a hedge against inflation. It was a statement of belief in Bitcoin as the ultimate store of value. Fast forward to today, and MicroStrategy now holds over 444,262 Bitcoin, making it one of the largest corporate Bitcoin holders in the world. How did they do it? Through a combination of innovative financial moves. One of the most notable was the $650 million raised via convertible debt offerings in 2020. This strategy allowed MicroStrategy to acquire more Bitcoin without depleting its cash reserves. By leveraging its stock price growth and issuing additional shares, the company raised another $500 million in 2021. These moves not only increased their Bitcoin holdings, but also showcased a masterclass in financial engineering. MicroStrategy's strategy has also redefined how corporations can view their balance sheets. Traditionally, companies hold cash or low-yield assets to preserve liquidity. By shifting to Bitcoin, MicroStrategy has demonstrated that digital assets can serve as a viable alternative, especially in a world of increasing inflation. The returns speak for themselves. As Bitcoin's value rises, so does the company's market cap, creating a virtuous cycle that benefits both the business and its investors. This strategy has positioned MicroStrategy as a trailblazer, inspiring other companies to consider similar approaches. It's no longer just about holding Bitcoin, it's about using it strategically to enhance value and gain a competitive edge. With MicroStrategy now part of the Nasdaq 100, the stakes are higher, but so are the potential rewards. But now we need to think, how will this strategy evolve as Bitcoin continues its journey into mainstream finance? For years, Bitcoin has faced skepticism from traditional financial institutions and mainstream investors. But with a Bitcoin-centric company like MicroStrategy now embedded in one of the world's most prestigious indexes, the narrative is shifting. This move sends a clear message. Bitcoin is no longer an outsider, it's becoming a cornerstone of modern finance. The inclusion also elevates Bitcoin's credibility by associating it with established institutions. When investors buy into ETFs like QQQ, they're indirectly gaining exposure to Bitcoin through MicroStrategy. For the average investor, this creates a subtle yet powerful bridge between traditional markets and the crypto world. It's no longer about choosing between the two. It's about embracing both as part of a diversified portfolio. But the impact goes beyond perception. MicroStrategy's presence in the Nasdaq 100 means Bitcoin's performance now influences traditional financial metrics, from index returns to ETF valuations. This integration blurs the lines between crypto and conventional finance, making Bitcoin an undeniable part of the global financial ecosystem. For institutional investors, this legitimization removes a major barrier to entry, paving the way for even greater adoption. As Bitcoin gains legitimacy, its potential to reshape global finance becomes increasingly apparent. From being labeled as a speculative asset to becoming a reserve asset for companies and even governments, Bitcoin's journey has been nothing short of transformative. MicroStrategy's journey into the Nasdaq 100 could be just the beginning. With a market cap exceeding $100 billion and a public float that meets key thresholds, the company is now a strong contender for inclusion in the S&P 500. This next step would exponentially increase its influence, bringing even more exposure to Bitcoin through traditional financial systems. If MicroStrategy enters the S&P 500, the ripple effects would be monumental. The S&P 500 is tracked by an even larger pool of index funds and ETFs compared to the Nasdaq 100. For instance, ETFs like SPY, which replicate the S&P 500, hold trillions in assets. Inclusion would mandate these funds to acquire MicroStrategy shares, further solidifying Bitcoin's presence in traditional investment portfolios. This could drive significant demand for both MSTR and Bitcoin itself. Now, the potential doesn't stop at index inclusion. As Bitcoin continues to rise, the value of MicroStrategy's Bitcoin holdings could skyrocket. This would not only boost the company's stock price, but also amplify its role as a proxy for Bitcoin. For investors, this presents a unique opportunity to gain exposure to Bitcoin's growth while benefiting from MicroStrategy's strategic innovations. Looking ahead, the lines between traditional finance and the crypto market will likely continue to blur. MicroStrategy's success could pave the way for other Bitcoin-centric companies to follow suit, creating a new era of financial integration. From MicroStrategy's bold moves to ETFs like QQQ bridging the gap between crypto and conventional investing, it's clear that Bitcoin is no longer just an alternative asset. It's a cornerstone of modern finance. Whether you're a direct investor in Bitcoin or simply holding ETFs with indirect exposure, understanding these dynamics can help you make smarter financial decisions. Now, let's get the conversation started. What do you think about Bitcoin's rising role in traditional markets? Share your thoughts in the comments below. I'd love to hear your take. And if you're hungry for more insights like these, don't forget to subscribe and turn on notifications. I will see you in the next video.